What's up, guys? It's October 16th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders, market cycle, context, and how to place trades around all this. If you guys are interested in seeing how I trade, check out the membership section where you can see me break down live trades. I'm winning and losing. They're not just winners, so check that out. We got the weekly chart on the left and the daily chart on the right. Weekly chart's a big bear bar closing on its low, testing the high here. Bulls want this to be a deep pullback in a rally and training range, and that's somewhat what we're getting, but there's a big tail on this week's bar. It's still an inside bar, so it'll be interesting to see what happens next week. Daily chart, zoomed in picture of this. Big bear bar. We've had 1, 2, 3, 4, 5 inside bars within this bar's range, but not within the rest of the bar's range. Inside bar here, bear shy breakout, it rallies. We're in a training range. Bulls try and break out, it sells off. Bears get the breakout, rally. So sellers at highs, buyers at lows. We haven't been below the EMA for this long since April 22nd. So look, touch the EMA, rally, touch the EMA, rally, touch, rally, touch, rally, touch the EMA. She was a gap bar below the EMA, and bulls weren't able to completely fade it back to the high. But bears also weren't able to get that second leg. So training range behavior, both sides want to get a second leg. Bulls want this to be a deep pullback of this. Bears want to start to a breakdown, but they're getting bad follow through. All right, let's get to it. We have a gap up. I'm gonna need. All right, sorry, there was a bike racing past my house. We have a gap up, trader with a bull bar, training range bar. There's more sellers and buyers at lows. Bar 2 is an inside bar, so it's breakout mode after a gap up, and then bar 3 sells off and then reverses. I thought this was interesting because it was very similar to yesterday's pattern. Not necessarily the same colors, but like it's just similar. It looks the same. Different out, somewhat of the same outcome. But yesterday had a rally. Today kind of had a rally, but the rally was weaker. Bar 3 sells off and then rallies, and then we get followed through bar 5, but then it reverses, or excuse me, we get followed through bar 4 and then it reverses. Then we have trap traders, it's trading range. Bar 4 looks strong to get a second leg, and it does. Leg 1, pull back, leg 2. Bears go for the gap close, but then that rallies for 2 to 3 legs higher. Leg 1, pull back, leg 2. You can buy bears that short down here or trap down here. Some bears are going to get out break even. Some bears are going to believe this is the start to a breakout, and in this situation, the start to the breakout bears was correct. They got the breakout bars 23 and 24, shot to get second leg, and now we have trap bulls. Bulls buy the high of 21, 22. They're going to buy more at 24 low and look at the 50% pullback. They get out of break even, and you get your 1-to-1 scalp or even a swing down. Again, I don't always go for swings, and if I do, it has to be a true second leg. And what I mean by true second leg is each leg is made up of 3 legs. Been talking about this a lot. So let's say this is one leg. It is one leg. It gets its own second leg here. Leg 1, pull back leg 2, pull back leg 3. Here's another leg. So like big leg 1, pull back leg 2. Leg 1, pull back leg 2, pull back leg 3. So a true second leg, like I wouldn't necessarily swing this leg because this right up here is a real second leg, like the actual real first second leg, and then you have to start using your market analysis. We analyze gaps here and here and think, okay, 27 through 29 shot to get a second leg down. We wouldn't get filled in this situation here. Yeah, I don't think we get filled, but bulls buy up here, the reversal bar. They buy more lower in the trend, get out break even, and they don't really get it. The higher time frame EMA is acting on resistance, and it sells off bar 34, big bear bar closing out slow. Kind of hard to trade because it looks climactic, but 35 is a first pullback in correlation to just bar 34. It's all bar 25 is the first real pullback. You could fade bar 35 and you get it 2-1. You can get 1-to-1, 2-to-1. You're gonna get a big bar here. Look at bar 37. It's bigger than all the other bars at the start of the trend. By trend, I just mean this section here. And it's a climax bar. It's a big bar, third leg. It's going to get a deep pullback, and it does. 30, it even actually got its own second leg, hit it on bar 40. Give me 1 second here, guys. Yeah, guys, on second leg hitting on bar 40. Bar 40 sells off and then rallies, trapping bears. They have to buy back shorts right away. Some bears are going to wait for the pullback to get out of break even. So bears get trapped down here. They short up the EMA. They buy back shorts at break even. That's the same place where bulls are going to catch their second leg. And then it sells off. Bulls getting out. Bears seeing some resistance. Bulls get 3 legs up. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. Bulls buy up here. They're trapped. They're gonna buy. Remember, the market moves off trap traders. So because trap traders are what is what moves the market. No, that's what I was gonna say, but I just repeated myself. Trap traders are forced to do what the with trend side is generally doing. So they're gonna, in this situation, bears are selling, or excuse me, in this situation, bulls are selling the same time bears are selling short. So that means, sorry, I'm getting a flurry of silly messages. I've been applying to a lot of different places, not necessarily thinking about next week or next month, but thinking about next year, and I'm just getting a reply back. So I got distracted, but I apologize, guys. I'm right here. 3 bear bars in a row. Shot off the second leg. 52. You could fade it. Not a trade I would take. I like to trade with limit orders. I only took 1 trade. I took 1 long today, and I just exited. Been kind of busy, but I really do want to start trading again in November. Leg 1, pull back. Leg 2, pull back. Leg 3. Again, look what we have in common here. Climactic third leg, climactic third leg. And this leg even still got its second leg. Again, not a trade I would take because it's late in the day and too far low for me to short. Bar 55 through 58. Gap, gap, gap. If you really were inclined to trade, I would sell above the last strong bear bar closing out slow, which would honestly be up here with a 1-to-1 stop, and you can make a scalp on 69.70. But I encourage everyone to only take trades they backtest. Over time, you will become a discretionary trader because you understand that the market moves in breakouts or reversals, which a reversal is a form of a breakout. But yeah, then we go sideways for the rest of the day. We had a nice bear flag here. We had a nice 1-to-1, 2-to-1, 3-to-1 trade here. Leg 1, pull back, leg 2 into the EMA. A lot of nice trades today, guys. You could even counter trend trade and make a scalp. Counter trend trade, deep pullback, make a scalp. So a very good day for both sides. It just depends how you see it. But regardless, so if you're a bear, you're going to see the breakouts and then you're going to get your second leg. If you're going to see a bull, you're going to scalp counter trend moves, reversals. And yeah, let's just go over the market cycle real quick. Trading range. Trading range here gets the breakout, resets the market cycle. So the end of the market cycle is trading range, the beginning of the market cycle is breakout. You can say the breakout starts here, you can say the breakout starts right around here. Or you can even, lately I just kind of use the EMAs and we can all spot sideways movement. So here are the EMAs. Breaking out below the EMA, reset the market cycle. First opposite bar 25 is the start to the channel phase, and we channel down all the way to bar 38. Then we get a rally from 38 to, we channel all the way down to bar 37. Then we get a rally from the low of 37 to the high of 54, 56. So now we have a channel against a channel. We're in a trading range. But the bear still had enough momentum to get a second leg down. So this is a leg from the high of 46 to the low of 61. It's a leg in a trading range because we got a rally right here. And then you can see that this actually got no continuation and bulls were making money at trading range lows. It's about 10 minutes, guys. Thank you for your time. I appreciate you guys always tuning in. If you have any questions, please don't hesitate to ask me. Thank you. Have a good night, everyone. Tomorrow's Friday. Use your stop loss. Bye.